Let's take a look at what's happened at the corner of Wall and Broad right now, down about 100+ points right now, on concerns that what ails Turkey ails the world. And Goldman Sachs out with a report that says exposure to anyone who has exposure to this is maybe bigger than we thought, maybe 70 companies deep that could be exposed, even indirectly, to this madness going on halfway across the planet. Let's get the read on all that with Conall McShane. We've got the Chief Prudential Market Strategist, Quincy Crosby, and the Wall Street Journal's editorial board member, crackerjack writer in his own right, Dan Henninger. Dan, and with you, begin with you. This idea that the exposure to Turkey knows no end. And even though they come out with a plan to try to stabilize the markets, it didn't do the trick, hasn't done the trick. So what's going on here?
Well, for starters, there is no real plan to stabilize the markets. The problem lies inside of Turkey, and Mr. Erdogan has given no indication that he's willing to allow the Turkish central bank to raise interest rates and try to stem the fall of the lira. And it looks like, from what Goldman Sachs is suggesting, as always, we went through the Mexican peso crisis in 1994. We had the Argentine peso crisis. As always, you're trying to find out where the exposures lie. We know that Turkey has about 50% of its foreign debt held in hard currencies, mostly dollars. But now we're undoubtedly going around Europe trying to find which of these European banks hold Turkish debt and how much of it do they hold, how much exposure do they have? That would be the big question right now.
All right, but it happens again and again, right? I mean, every time we've seen this sort of thing crop up, we could go back to Thailand and the bot crisis and all this other stuff. It always seems that the exposure would by definition seem minimal, but it's never deemed minimal, or at least the reaction is not minimal. What do you make of it?
Well, you're always worried about the collateral damage. I mean, I just go 1 year to 1998 when Russia defaulted on its ruble-denominated debt. Everyone thought, well, I don't have ruble-denominated debt. I don't have their GKOs. But guess what? Long-term capital management went under, and it required 2 rate cuts by the Federal Reserve, one in between a meeting, which is super medicine, in order to get liquidity and confidence back in the markets. And so the question now is there a hedge fund which is levered up and got it wrong? The dollar is rising against other currencies. That in and of itself, in a slow market with low volume, can move markets either way dramatically. And that's the worry. It's one of those things. Sell now, ask questions later. Better be safe than sorry.
One of the things I noticed, Conall, Goldman, in warning about a number of U.S. companies' exposure to this, it said those that are exposed to countries like Brazil, Russia, India, China, so-called BRIC countries, Wynn Resorts, Las Vegas Sands, Morgan Stanley, Micron, NVIDIA, Citigroup, and on and on. So it wasn't about their direct exposure to Turkey, but exposure to those who have direct exposure, which is weird.
Which is stuff we wouldn't even have thought about, more or less known about going in.
Did you know this when you were subbing?
Right. Oh, I did. No. I didn't want to give it away.
You wanted to save it.
Exactly, until you came back.
Move,
Always up here.
Clever.
But it's always interesting in these crises. After we look back on them, we always have them identified in Thailand or wherever it melts. So maybe the collapse of long-term capital management. If hindsight wasn't 2020, we were able to know about these things before they happen, it'd be a lot easier, because it's always hard to identify them afterwards. Just in reading about it, Spanish banks, I believe, have the most exposure, $81 billion lent to Turkey in the first quarter. Then it's the French banks at $35 billion and the Italian banks at $18.5 billion. But what's much more difficult to calculate is who is kind of the third and fourth down the line that are exposed to it. But for now, the conventional wisdom, which sometimes is proven wrong, seems to be that this can be contained, and it's a Turkish problem. That's why we see here in the United States stocks like Amazon hitting all-time highs again today. And so we'll see, but it's a little early to.
But and exactly to Quincy's point that it can sometimes take a life of its own and then correct. But Dan, I am curious what you make of this idea that we are always reminded about people who can be exposed to something and not know it. Or if you're investing in a fund or realize that a lot of banks indirectly or directly have exposure to something like this, do you clear out of the fund? Do you clear out of the investment? Or do you just let cooler heads prevail?
Well, I mean, eventually cooler heads will get their arms around a subject like this. But
not when the president is upping the ante and doubling the tariffs, right?
Well, exactly right. I mean, here you've got the President Trump imposing sanctions on Turkey because he wants Pastor Brunson released. So he's raised the aluminum and steel tariffs on Turkey at a time when the Turkish lira is falling. And, I would argue that the U.S. Treasury has got to be very careful at this point. You don't want to be sanctioning a country with which we do have to have relations, which is important, because of our relationships with Syria and so forth, at a time when their own financial problems are under such pressure. So I think the president is probably playing a little bit with fire here.
What about the use of tariffs rather than just plain old sanctions as the weapon this time around, which we don't?
Well, imposing tariffs on an economy that's collapsing, is only going to make the economy collapse more. And presumably, we do not want the Turkish lira to completely fall and collapse because of the contagion effects it could have on the people we're trying to identify.
Right now, right?
I know, and he's conceivably making it worse by imposing these tariffs.
Quincy, didn't these guys get along, Erdogan and the president? I mean, they were tight buds, right? What happened?
They were. He was in the group that the president was very fond of. But there's also another issue, and that is the American presence, the military presence in Turkey. And that's one where there is a lot of friction regarding whether or not he wants us there. And it's a very important geography for us, the Middle East and over towards Europe. And, this is going back and forth and back and forth. The president is extremely irritated. And one other thing, typically in events like this, you'll hear from the IMF, whether you like it or don't like it. A headline will come in, they're working to do something, along with the shareholders in the IMF. This time around, you don't see it because of the United States. That is a political position when you represent the U.S. to the IMF. And
what do you mean by that?
We're a big shareholder, and I'm sure right now the president is saying, I don't want the IMF, I don't want the U.S. At this point, keep quiet, and the U.S. takes a position.
Okay.
Pressure on them.